participants in this meeting, and we look forward to a very successful launch of the status of the built environment for the year 2020. We all know that we are living in very unprecedented times. We've not experienced this kind of pandemic in our lifetimes, but we are all hopeful and optimistic that we shall overcome and come out stronger from this COVID-19 pandemic that is facing the humanity at this time. So once again, welcome and thank you for making time to join us this morning. I'd like to take this opportunity to invite the President of the Architectural Association of Kenya, Madam Mugure Njendo, to make a few welcome remarks, and then you can proceed. Thank you, Madam President.
Thank you very much, Jacob. So as we begin, ladies and gentlemen, just a friendly reminder to put your microphones on mute. But ladies and gentlemen, chief guest, the CEO of Shelter Afrique, members of the Fifth Estate, AK leadership is represented here, my esteemed colleagues and leaders from other associations. I'm happy to note that we do have the president of Women in Real Estate on the meeting with us, Karibu Sana, and we shall be joined by other leaders in the built environment as well. Good morning to everyone. Typically, we would hold this launch as a breakfast session, which we typically would hold a breakfast session where we just meet with the press and launch our report. So it's my honor to welcome you to today's launch of the Status of the Built Environment Report for January to June 2020, produced by the Architectural Association of Kenya. AAK produces this report twice a year, and we present the highlights in the real estate sector. We track development in land, financing, infrastructure, policy and legislation, and we also capture developments happening in the public space, government projects. The report for the first half of this year highlights a lot of interesting trends in the real estate sector. It's worth noting, of course, as Jacob mentioned, that the research behind this report has been undertaken in unusual times, in the middle of the COVID-19 pandemic and a projection of a global recession in the aftermath of the pandemic. However, it also does highlight some opportunities for a local economy, which we'll speak about later in this session. The lockdown on international travel and closure of businesses caused quite a disruption in the construction industry supply chain, particularly with supplies coming in from China. The report does highlight that where cost of construction, including labor and materials, recorded a significant increase. I think let's all think about the question, what is a pandemic teaching us about the real estate sector? I'll highlight the report later in today's session, but before doing so, I'd like to invite our chief guest for today's session to make a few remarks prior to the launch. We're very excited to have him here with us. He has more than 20 years finance and business executive leadership experience in the real estate sector, in finance, retail, and wholesale banking. He currently serves on the following additional boards. He's the chairman of Rugarama Park Estate in Rwanda. He's the chairman of the African Union for Housing Finance. He's a director for the Tanzania Mortgage Refinance Company. He's a director for CRRH in Togo. He's an advisory board member, Pan-African Housing Fund. And he has experience across the board in financial services, mergers and acquisitions, real estate, fund management. He's a chartered accountant and a member of both the Institute of Chartered Accountants in South Africa and the Institute of Chartered Accountants in Zimbabwe. He holds a master's business and international finance degree from Durham University. He's the chief executive and board member he has served as the chief executive and board member of large banking financial institutions in South Africa and other countries in Africa. So he really is a guest that can give a Pan-African view in terms of real estate. It's my privilege to welcome the Chief Executive Officer of Shelter Afrique, His Excellency Andrew Chimponda, to address us and make his opening remarks as the chief guest. Karibusa. Andrew, welcome.
Asante sana, Madam President. I just want to thank you, Madam President, and the members of the Architectural Association of Kenya for inviting me And I would like to stand by the protocols that you've laid down. Good morning, Abari Abseni, and I hope that the launching of this status of the built environment in Kenya will continue to add value across the board. Through you, I have a few remarks to make, but I thought I put them in a short presentation. I'll stick to my time, just so that I made some effort, not only in dressing in your logo colors, Madam President, but also in preparing something to show that we do recognize the value that the Architectural Association of Kenya provide. Now, my only challenge is I can't drive this, someone else is driving it, but maybe when I hold my ear, if it's Wana Jacob driving, he can change the slide. So I think just for the benefit of some of your members, I know that our association as Shelter Afrique with AAK dates back a long time, but I'm just going to give an overview of who we are as Shelter Afrique to those that might have limited knowledge. So as you can see, we've been in existence for about 36 years, going on to 38 years. And we are a Pan-African institution that supports housing development in Africa. We're owned by 44 countries, plus the African Development Bank and Africa Reinsurance Corporation. However, our projects are currently in 25 countries as we speak. Our focus is to build strategic partnerships and alliances. So I'm just going to highlight specific things on the slides, which I've provided to you, Madam President, just so that in case people want to view, they can look at the detailed speech and the slides as well. So if we can move on to the next slide. So these are our products. Our products are obviously predominantly lending to institutions. These are tier 1, tier 2 banks. We do provide lines of credit. We also provide guarantees. Why am I saying this? Is because as you work with your clients and you find that your client, be it a developer, is short of equity, but the bank is prepared to provide, let's say 80%, you can come to us, Shelter Afrique. We can structure a junior debt or a quasi-equity kind of provision to allow your clients to be able to move forward. Of course, we're introducing trade finance as well for all builders that want to import materials. And if they work through Shelter Afrique, they can actually get a lot of the materials, a lot of taxes, duty-free, etc., exemptions. And then we focus on public-private partnerships. Why? Because our core focus is affordable housing. If we can move on, Wana Jacob. Okay, so I think, of course, we look at 3 areas as the drivers to deliver on affordable housing. I won't dwell so much on these because your report provides even more detail. But I would like to say, if we can move forward, I would say technical assistance, of course, and procurement. We do support buy local, build local initiative. I think we've seen with COVID that if we were more internally dependent, we would not be affected when China kind of closed down. We've seen that in many countries and many markets. And we do focus on trying to encourage strategic alliances with bulk suppliers of materials like Lafarge and Dangote. What we are saying is, from a technical assistance point, value engineering and design ideas to provide affordable housing developments is what we look to from members of AAK. If we can continue to move. Affordability drivers, of course, exemptions. We've seen in many markets where governments provide infrastructure subsidies and other, kind of incentives and subsidies and exemptions. You find the end product, turns out to be cheaper. The other area, of course, is the issue of offtake, making sure that, affordable interest rate loans are also provided just to improve and enhance affordability. So where there's offtake, when the building is built, there's no issues. Okay, we've also highlighted a few catalysts to housing delivery. Of course, we are big proponents of digitization of title deeds. And I think that's a project which started, which we'd like to see an end to. And also in the status of built environment report, Madam President, we've seen a focus of trying to reduce the time it takes to get approvals from 41 to 30, and also the introduction of digitization. So we really support the initiatives that the AAK have embarked on. If we can continue to move. Okay, I think we all have been to Kibera. I'm sure we've been there, we've passed there. This is another slum in Lagos. We can move Jacob. These are some of our developments, but many more. Let's move. I want to keep to my time. I think we understand COVID and how it's impacted the economies within Africa, affecting trade, also causing loss. And what we are saying as we move to the next slide is that we want to encourage building, construction, infrastructure development as the panacea to kickstart the economies in Africa. If you look, the contribution of construction to GDP is 11% according to the World Trade Organization. In Kenya, sitting at about 6.5%, but Africa sits at 10%. So there's a lot of room for us to continue supporting the construction industry through financing and also even infrastructure support. And we are looking and saying, let's use COVID as an opportunity and let's work together to revive jobs and of course, increase densification and increase economic growth. And also obviously reduce slum upgrades. So housing delivery is a catalyst for Africa's economic revival. I know we can maybe all read, but we can continue to move to the juicier part. So we are looking for a partnership between ourselves as Shelter Afrique and AAK. And one of the things we are planning to do now is to introduce a more like a competition, but this will be driven through our own resident architect, Kunmi Odufuye. And what we're trying to do is to look for a design for a flagship social housing product, which we can then replicate throughout East Africa and other such places, which looks at the few facilities we've stated here in terms of innovation, in terms of affordability, and in terms of considering eco-friendly building construction techniques. So of course, the winner, we will definitely award a prize and also provide them with the contract. So in short and in closing, Madam President, let me say that we are proud to be associated with the AAK. We are very proud of your strong leadership and the commitment to the profession through your members. And we want to continue to work together to make sure we are even a part of your next publication, even if it means we co-brand, we co-sponsor, or whatever we can do. In short, we thank you for this opportunity and we look forward to a good launch to this morning. Thank you, Madam President.
Thank you so much, Andrew and CEO, for your very insightful presentation. It shows that there's still possibilities for growth in the sector in Africa, despite the challenges that we are facing at the moment with this pandemic. Thank you so much for that. After this, I'll want to invite Madam President again to present the status of the built environment report for the Architectural Association of Kenya. Karibu, Madam President.
All right, thank you very much, Jacob. I think I just want to appreciate again that remarkable insight given by the CEO of Shelter Afrique, particularly undertaking a design competition where social housing is concerned. I think one of the challenges that we tend to have whenever we talk about social housing, affordable housing, is the quality in terms of designs. And certainly AAK is fully in support of dignified and good design for housing that is affordable. So we are very glad to be working with Shelter Afrique on that as well. So just so the members of press who are here with us can understand what our program today will look like, I would like to launch the report and take you through that report. Immediately after that, we shall have the chapter chairs of AAK. AAK has professionals across the board in the built environment. So it's not just architects. We have architects, engineers, town planners, landscape architects, construction project managers, environmental design consultants. So we shall actually have a panel who will sit down and discuss the report. We encourage right after that panel session for members of the press to ask questions. After the session, we will also be sharing the status of the built environment report as well as the presentations that have been made here today. And we just really encourage you to engage with us as much as possible on this platform. Before I launch the report, I also just want to recognize that we also are joined by ACMK, that's the Association of Construction Managers of Kenya, as part of this presentation today. So welcome, karibuni sana to this. So now I'm happy to officially launch the status of the built environment report for the period of January to June 2020. If we can have that on screen, we shall launch the report and I'll take you through. Okay, thank you very much. And now that we have it, the launch of the status of the built environment report for January to June 2020. I'm happy now to take you through the audience in summary through highlights of the report. James, just listen for my cues. As mentioned before, we'll just take you through what the report contains firstly. If we can have that report on screen again. All right, thank you. If we can kindly maybe just zoom in just a little bit on the report as well. All right, my thanks. Let us move to the page table of contents so that we can see what this report covers. As mentioned, I will not touch on all the points. We shall share the report after this. But we do generally cover looking at the industry in the country across the board, that is real estate, and we look at real estate through all the different sectors of projects. We look at infrastructure, we look at land, we look at financing, we look at the investor and developer scene. We also look at the Big Four agenda and we like to capture where we are. This year's report is also going to cover the impact of COVID-19 on the built environment sector. And then also, because we have arising issues, we will also cover a little bit about transfer of services from Nairobi City County Government to Nairobi Metropolitan Services. And then we'll look a little bit at development applications approvals in the Nairobi County Government. And then we'll also take a look at the National Construction Authority approvals. We shall move on to the next page in sort of a brief introduction. The report looks at the construction industry as a whole. And we do note that the construction industry does have a number of what we call micro entrepreneurs, a majority of whom operate in the country's informal economy. According to KNBS, the construction industry grew by 6.4% in 2019. Growth was down from 6.9% at the same time in 2018. The growth was partly attributed to the rise in terms of the government infrastructure expenditure. If you look at the numbers from 2018, 415 billion, and that rose in 2019 to about 456 billion. Let's move on to the next slide. We also looked at the cost of construction, and I mentioned this in my opening remarks, where cost of construction has increased, particularly with regards to what has been happening globally. Labor costs as well as material costs have risen. We do note that labor costs have recorded a lower increase in terms of from last year in 2019 as compared to 2018. The number of completed government residential project buildings in 2019 stood at about 530 units. We've also noted some of the activities being undertaken by the Nairobi City County government in terms of the number of units being developed, 13,976 units. Additional National Housing Corporation has also been advancing loans. It's worth noting that they advanced loans amounting to 106 million, and the loans were advanced to 49 individuals. We move on to the next slide, please. In terms of the real estate sector, I'll do a quick overview, then I'll go to the various sectors. Again, we note that there is an increase in terms of the real estate sector, but a slightly lower increase than the same time last year. The sector had a 4.8% increase in 2019 in Q1. In Q1 of this year, we're looking at a 4.3% increase. The total value of buildings approved in the first 2 months of 2020 was 96.9 billion, which was actually a 174.4% increase compared to the same period last year. We do want to note that last year we did suffer a number of challenges with regards to approvals. A new committee was put in place at the end of last year, and that committee largely from January through to April worked on clearing the backlogs of approvals from last year. Markedly, of course, the spread of the virus took its toll on key sectors, which directly affected the construction industry, and we'll discuss that a little bit, particularly hospitality and retail sectors, which are considered areas of super spreading, areas that we congregate in. We'll move on to look at residential property. In terms of the residential property, despite the economy having its challenges, the residential sector actually remained relatively stable, with select sectors softening a little bit. The apartment market recorded some declines in terms of price appreciation across all the segments. However, the upper end mid-market for detached units recorded a positive change of 1.3% as the asking prices actually continued to increase. Total returns actually came in at 5.5% and 5.3% for detached units, which was an increase from the same time last year. Let's move on to the next slide. Again, still on residential, this is just a general sort of look at in terms of rental yields and the price per square meter for apartments. The price per square meter for apartments in H1 of 2020 came in a little bit lower than last year, where we have sort of units that are open and landlords are forced to make difficult decisions. The average cost for the half of this year came in at 96,543 per square meter, and last year was 98,352 per square meter. We move on to the upper end bid markets. We'd like to note that Kilimani and Kileleshwa recorded a negative price appreciation of 0.7%. Westlands, on the other hand, recorded an average annual price appreciation of 1.6%, attributable to investor demand. Other areas like Dagoretti, Indigwa, and other lower mid-end markets recorded a price appreciation of 3.1% and 1.2% respectively, driven by demand from Nairobi's working population. Overall, the apartment market recorded attractive rental yields, averaging about 5.5%. Compared to detached markets average of 4.6%. We'll move on a little bit to look at what the National Treasury was looking at. National Treasury moved to downgrade this year's growth to a possible 1.8% after growing 5.4% last year. And of course, this is attributed to looking at the effects of the novel coronavirus. And of course, various factors, including how cautious the lending environment has been. We've seen in the financial sector quite a bit of cautiousness, which we'll also touch on later in this report. With regards to commercial property, in the commercial office sector, recorded a 0.3% points decline in the first half of 2020. Average rental yields and occupancy rates also went down. The decline was mostly as a result of the measures taken by the government to reduce the spread of the coronavirus, which led, of course, to reduce demand for office spaces. You have a lot of organizations that are now working from home, and organizations, of course, that have also put on hold expansion plans. Maybe to note one major company that went to a fully work out a plan to return to office, for example, is Andela, which is a tech company. Asking rents for office spaces also saw similar changes. a decrease of 0.8% to an average of Kenyan shillings 9.53 per square foot in the first half of 2020. And this is down from 96, Kenyan shillings 96 per square foot in the similar period in 2019. We move on. We noted, as we noted in our previous report, that there does continue to be an oversupply of office space, which has also led developers to make some difficult decisions, including in some instances reducing or maintaining their prices and rents in order to remain competitive. Let's move on. In terms of the office sector of real estate, the best performing submarkets are Westlands, Gigiri, and Karen, recording some good yields. Gigiri actually went against the grain quite a bit to record a 4.5% increase in occupancy levels. In Nairobi CBD, Thika Road and Mombasa Road, we do note that they recorded low rental yields at an average of 6.8%, 6.2% and 4.7%. This has continued to be a trend in our past reports, where we've noted that people are moving away from the CBD primarily due to traffic issues. We move on to retail. Retail had a 0.4% decline in rental yields for rental spaces. Similarly, there was also an average drop in occupancies, so not just the yields, but also in occupancies. And the decline, I think, is very clear to most in the sector. Primarily, occupancy rates in major retail centers have made strategic decisions to cushion themselves, whether it's restructuring to limit the number of, for example, branches that they have. An oversupply of retail space in certain locations, of course, was also a challenge. And of course, because of what is happening where businesses have been forced to downscale or to reduce salaries in some instances, there's constrained spending power among consumers, and this, of course, has also affected the retail sector. Karen and Westlands recorded the best performance compared to other retail nodes in the Nairobi metropolitan region. And then satellite towns recorded rental yields of about 5.4%. Let's move on to the next slide, please. In the industrial sector, we do note that there was a report done by Knight Frank where Nairobi has continued to undergo major roadworks, including the construction of northern, eastern, southern, and most recent western bypass. And the objective of this is actually for the industrial sector in terms of to impact and to go ahead and regenerate the industrial sector in terms of movements of goods from point A to point B. The steady supply of grade A warehousing is further expected to result in a downward pressure on prices of poorly located grade B warehouses that still represent a majority of the stock in the city. With regards to the hotel and tourism sector, the first half of 2020 saw this sector take a beating, particularly because of COVID-19 and the shutdown and cancellation of meetings, conferences, and events. As I mentioned, we would have been having a breakfast event even for this launch. So we are also contributing to that change. So since March 15, 2020, where a number of hotels actually have been affected, some closed down in the first half of the year, and we've mentioned some of them within this report. Others have had to suspend operations, so they have been affected quite a bit. We move on to page 12 of the report. In addition to those developments that have been affected, the industry, of course, has also been affected by other adjustments to try and contain the spread of the virus, including bans of international flights, the bans of movements within and in and out of different counties, and of course the local carriers in terms of airlines, which have been grounded for a while and are now back. The hotel chain development pipelines in Africa 2020 reports, however, do reaffirm the attractiveness of Kenya's hospitality sector. This sector has shown growth consistently in all our previous reports. So we do feel this particular snapshot is a snapshot that has been affected mostly by COVID-19 and not other factors. With regards to roads, according to the KNBS report, government has continued to invest in construction and rehabilitation of road infrastructure. We want to note that the expenditure of roads is expected to rise by about 10%. Similarly, development expenditure is expected to rise again by 15.5% for 2019-2020. You do note that difference in terms of increase. We're set also to complete our first annuity road this year, after a little bit of false starts over the years. The Ministry of Housing, Urban Development and Public Works also indicate that 91-kilometer road project in Kajiado County will be open for use before the year ends. Kindly scroll downwards again, please. Okay. Also, the expansion of Nairobi Mombasa Highway is also lined up under the public-private partnerships where users will pay tolls. As at June 2020, the National Treasury had lined up 80 projects worth 1.1 trillion to be executed via the PPP model. And those also include the Nyali Bridge, Nairobi Nakuru, Mau Summit, as well as maintenance of Thika Road and Nairobi Mombasa Highway. Nairobi Expressway, this has also commenced. The expressway begins at Mulolongo to JKIA, Nairobi CBD, and ends at Westlands along Waiyaki Way. In addition, this is being done by CRBC under the public-private partnership. Let's keep on scrolling downwards, where the project involves, they will recoup their costs through pay-as-you-use fees on the toll. I think important to note is that there's also still a petition in court pending. For AAK, we've also expressed our concern in terms of prioritization of this project and the level of stakeholder engagement and consultation. We move on to the energy sector. The main construction activities in Kipeto have been completed following the completion of 60 wind power turbine generators. It's a very good milestone in terms of energy production. We also note that it's expected to have a capacity of 1,000 megawatts and it will be the second largest of its kind in the East African country. We move on to the next slide. In looking at the land sector, the land sector recorded an overall annualized capital appreciation of 1.4% in the first half of 2020. Unserviced land in satellite towns had an annualized capital appreciation of 3.4%. This can be attributed to the growing demand for land in these areas, of course, fueled sometimes by affordability. Conversely, other areas like low-rise residential areas like Karen and Runda recorded an average annualized capital appreciation of 3.8%. Karen was the best performing sub-market with a capital appreciation of 5.6%. In Ridgeways, we noted the land prices recorded a marginal appreciation of 1.8%, attributed to a slow demand. We can move on to the next slide. Other notable developments in the land sector include the Ministry of Lands and Physical Planning invited the public for participation in the regulatory impact statement for proposed land transactions. The regulations will affect the development and implementation of a national land information system. The President also assented to the finance bill into law on June 30, 2020. The Act repealed Section 22C of the Income Tax Act. This hopefully will be touched on during the panel session as well. And this was a provision for registered home ownership savings plans in Kenya, a scheme introduced in 1996 to encourage savings by offering tax rebates. In abolishing the scheme, the Parliamentary Committee, In abolishing the scheme, the Parliamentary Committee cited a low uptake of the home ownership savings plan. We move on to the next sector of financing. In financing, a basic overview, a positive development where several banks committed to 335 billion in mortgages to fund the affordable housing program. This lent a major boost to one of the big four economic pillars, among them Equity Bank, KCB, NCBA, and Housing Finance. And we also note that also developers have been, developers as well as prospective homeowners have been registering on the Boma Yangu platform. The same comes in the backdrop of a government proposal to allocate 15.5 billion to the housing, urban development, and public works sector. We also note that in the budget, the government has allocated 6.9 billion to cater for affordable housing programs, 7.5 billion for the Kenya Urban Program, and 1.1 billion for the ongoing construction of markets, including Gikomba, Githurai, Chaka, Kamukunji, and Dagoretti. In another development, CBK converted a one-year treasury bill into 6-year infrastructure bonds. The treasury has sought to raise 25.6 billion. I'll move on a little bit to the next part of the report. If we can scroll down, I think in terms of finance, that will also be discussed a little bit later. In terms of the investor and developer scene, let's scroll down to the next page. Okay, the Big Four agenda. The government has increased its efforts to spur industrial growth, and this has been done through introduction of SEZs, including, for example, Tattoo City, We also note Dongo Kundu in Mombasa, Naivasha Industrial Park, Konza, Lamu Port. Operationalization of the said SEZs is expected to support local production of construction materials. Let's move on. So you noted about 5.3% growth in the industrial sector. Samir Africa, a local company whose principal business is importation and sale of tires, announces turning focus to real estate, an interesting turn of events. We do note their current property investment. This we felt was important to report because it is a fairly large company moving into the sector of real estate. And the company hopes to return to profitability with returns gained from renting and leasing of their various properties. Of course, the move is an indication of investor confidence in the real estate sector. And this is amidst a tough economic environment. In terms of affordable housing, about 300 Kenyans have met the 12.5% threshold, which is the bare minimum for one to qualify for a housing unit. The 228 units at Park Road have been handed over, ready for occupancy. The second and third phases of the project are underway right now. And we do note they comprise 1, 2, 3, and 4 bedrooms. We have also noted the basic requirements. You can scroll downwards. Potential homeowners will also benefit from the partial credit guarantee to access mortgage finance from various local banks. Those banks that we mentioned earlier that have partnered with the government subject to respective credit approval processes. Affordable housing participants will also be favored with a tax relief of up to 10 shillings, 9,000 per month. We also note that the recent rollout of affordable housing program is aimed at developing approximately 1,980 housing units. This is by the Kitui County government, and it's hopefully going to boost the goal of the national government to achieve the 500,000 units. In this report, we also do touch on the impacts of COVID-19 on the built environment. As I mentioned earlier, we are in unusual times, and it's important to also touch on these unusual times. Amid increasing concern over COVID-19, built environment professionals have experienced a significant decline. AAK undertook a study to find out from members what the challenges have been in the built environment sector since COVID-19. We noted that about 87.5% indicated they have experienced a significant decrease in inquiries. About 4.55 and 3.45 noted an increase in number of prospective client inquiries for new projects and ongoing leads, respectively. The survey also indicated that the pandemic has not only resulted in delays, but also resulted in suspension of ongoing works. So there are challenges in terms of how COVID-19 has impacted built environment professionals. And that report is also available from the AAK website for any member who's in this meeting who may be interested in that. I think we'll scroll down a little bit to the next page. Okay, I'm sorry, maybe if you can go up one page just so I can mention something in my last statement there. I think one of the things that keeps coming out of this global pandemic is because of these issues we have experienced, whether it's interruptions in our supply chain or whether it's increased costs because of the global pandemic. It is an opportunity for us to really focus, as Andrew mentioned, on buy local, build local, in terms of our construction projects. Let's move on to the next slide. Okay, we also want to capture the effects of the transfer of functions from the Nairobi County government to Nairobi Metropolitan Services. And just in terms of an overview, the overview is there. We conducted a short survey from our members to assess the impact of the transfer of services from NCCG to the NMS. And obviously our members interacted with NCCG and now with NMS in terms of getting development approvals for projects for clients, for developers, for investors. I think the largest challenge that we have witnessed is that 62.96% of the respondents indicate that we have not been adequately made aware of the changes effected in operations since the transfer of functions to NMS, with about 53.85% indicating that the current operational performance in terms of the online platform for approvals has remained the same since the transfer of functions. I think what this shows is that fundamentally the e-permitting system does work, but what is really needed is the good faith in terms of governance to ensure that the permitting system works uninterrupted. So we do note also that we have some concerns in terms of how the projects are being approved right now. Low-risk projects had a commitment to be approved within 7 working days. That has not yet been actualized. Also, the system had a provision for a QR code so that we would be totally paperless in terms of approvals. That has also not been undertaken. We'll move on to development application approvals. Those statistics show from January to June 2020, the sort of applications that have been approved. We'd like to note that this actually was done under the last committee that was over at the Nairobi County government, which had representation from professional associations, and we managed to clear a lot of the backlog that was there from 2019. The challenges that we witness, again, I must say that they do arise out of political interference, whereby the system, it is good for the economy, it is good for the construction industry, it's good for the built environment, for these systems to remain uninterrupted and for approvals to be generated without interference. The Physical Planning Liaison Committee did not meet between May and June 2020. These are the effects and challenges we've witnessed in the transfer of functions, where there were no meetings that happened during that time. And additionally, for the meetings between 24th March and 23rd of April, which you can see the approvals there and accumulated to about more than 400 plans, also were not released for a period of 2 months. And there's a summary at the end of that in terms of total permitting fees collected. So certainly in terms of development application approvals, the challenges we had witnessed continue to be there, and we do hope that we can look forward to streamlining of this. With regards to National Construction Authority, NCA, recently obtained prosecutorial powers following the ratification of the Business Laws Amendment Act on 18th of March 2020. And we do note under the new law, there's a fine in terms of not exceeding 1 million shillings or imprisonment upon conviction for failure to comply with an order of an NCA investigating officer. We also note that the authority has been liaising with county governments in terms of the custodians of development control functions in terms of effecting this. We move on to the next slide, please. Okay, these are just the statistics in terms of the projects that have been approved by National Construction Authority. We note that the largest amount of projects have been private projects, 2,180. And we also know that mostly building works projects have been approved. Next slide, please. Okay, and then that's just a project-wise summary and then our references. So I think I do want to just make a few comments before I hand back over to Jacob. I think it's interesting to note that the residential sector has remained relatively stable amidst everything that's happening. Particularly single-family detached homes have generated interest, and perhaps that's because more people now are working from home. Moving forward, we do expect that the trajectory will remain the same post-COVID. Additionally, I do want to mention in the health sector, due to the pandemic, we have seen the emergence of a number of homegrown solutions ranging from hand washing and related sanitary facilities. For example, Aga Khan University Hospital in Nairobi recently set up a field hospital. We've seen what Machakos County has done. In Murang'a, the county government has also built a hospital. I think an opportunity has presented itself as an urgent need for us to address gaps that have long been existent in the healthcare sector. This is also supported by the recent government announcement that more public facilities need to be made available. It's also worth noting to the members who are here today that AAK did form a rapid response team, a COVID-19 rapid response team, and has been working closely with government as well as private institutions and Kenya Healthcare Federation to offer solutions in terms of innovative and accessible healthcare facilities during this time. Lastly, in my closing remarks, I just want to mention that if we must learn anything from the trends that have been identified in this report, from the status of the built environment report from January to June 2020, is that the current pandemic will have an impact on the consumption patterns of real estate products, and that our industries are available, they're capable, and they're resilient. And we must literally buy Kenya and build Kenya. With those few remarks, I will end and hand over back to Jacob. But before I do so, I do want to recognize the presence of a few chairs of various associations who have joined us. I appreciate the presence of Planner Mairura Omwenga, the chair of TISPAC, the presence of Tom Okech, the presence of Gekonyo Getonga, and any other member who may be here. We welcome you very much into this session. Kenya Property Developers Association, Karibu Sana. Thank you for being part of this session. So Jacob, back over to you.
Thank you very much, Madam President, for that comprehensive presentation of the status of the built environment in Kenya. I would like to invite our Honorary Secretary, Mumbua Musimi, architect, to take over and run with the question and answer session. Thank you.
Good morning, everyone. Thank you, Jacob, and thank you, President, for a good presentation. I am now going to moderate a session where we unpack the status of the built environment report by just having a view from each of the professions represented at AK, the architects, the QSAs, the engineers, the planners. So I will ask each of the chairpersons a few questions so that you can have a view of what it is that the things we've reported impact on in the country. So I'll just go right into it, and I will start with money matters. So that means the QS chapter, Chairperson Francis Mbaya. The cost of construction inputs has recorded a marked increase for non-residential buildings. So what would you say is the reason for this? QS Mbaya, karibu sana.
Okay. There is a normal inflation that would be expected year on year. But also in the last period, we also saw that with the insistence by the government that transportation of items from the coast to inland should be through the SGR, and also with the impact of that, we will find that, and something that needs to be further researched on, what the use of SGR for bringing items from the coast to inland, that may have had also an impact on the cost of transportation of materials which are imported. And since we know that we import a lot of materials for finishes, fittings, and once the structure is already constructed, there is people normally tend to want to bring in some items from outside the country. China has been mentioned, and other places, Turkey, the other countries. So the use of SGR may have had an impact also on the cost of construction and cost of materials. Labor, there was not serious increase because of the fact that we find that there's been no basic pay. We are used to every Labor Day that there is an increase in basic pay. This has been put on hold, so labor costs have not changed much. But materials, that may be a factor to consider, the use of the SGR.
Thank you very much, QS. So thank you for unpacking that for us. So we understand that the cost of construction is largely impacted by where we are getting our products from and how we get those products to ourselves, so the transportation of them. So I'll just go to Planner Juliet Rita. And I'll note that in the report, we have noted that there's a decline in asking prices in the areas of Kilimani, Kilaleshwa, which are normally considered upper mid-end. At the same time, there's a price appreciation for areas like Dagoretti and Bindigwa, and these ones are considered lower mid-end. Can you explain this to us in a planning perspective?
Thank you, Madam Mumbua. And I'll just take you back in terms of just appreciating the dynamics in the market sector, and also in terms of regards to planning. And just to highlight in terms of planning, we look at the zoning, the land use zoning regulations that really dictate how we do land subdivision in terms of land sizes, and also how we use the land thereof. You have to appreciate in the areas that we call the lower middle income areas, we have provisions that allow us to subdivide land to what we call the 50 by 100 or the quarter or the eighth acres. And that really translates to the land being more affordable in terms of comparison to the upper middle class areas where we have regulations that limit us to subdivide the land to a minimum of quarter acres. So if you look at the price of, say, if you're going by a price of an average price of 25 million in the lower middle income areas, it means that with slightly like 4 million, 5 million, somebody will be able to afford a property, compared to the upper middle income where you will need, say, an average of 100 million to afford a quarter acre, since we are going with an average price of around 420 million per acre. So that's basically would explain where there's more uptake of property in the lower middle income areas. Thank you.
Okay, thank you, Juliet. So this pricing has to do with the zoning regulations that are in place. To the members of the press, I'll just request that you register with us. If you go to the chat, there are details there of how you can register with us. Also prepare your questions so that after this panel session, I can take your questions. So my next question is going to Architect Florence Nyole, who is the chairperson of the Architects Chapter. We've noted in the report that there's an oversupply in office space, and this has forced developers to reduce or to maintain their prices so that they can be competitive or they can attract occupants. Do you see this as the beginning of a reimagination of the design of office spaces?
Thank you very much, Mombua, for that question. And I do agree with you that it is the beginning of reimagining of our spaces, but I wish to take us back and say that the office space was already changing even before COVID-19. Over the years, we've seen an increase in co-working spaces and serviced offices where most businesses had moved online. And so people are able to actually only work or meet when it is necessary. So already that had already taken place. But of course, with the guidelines from government to stay at home and to assist in flattening the curve, then of course, with the onset of COVID-19, then most people were not actually using the spaces that they had already paid rent for. So they were able to either negotiate for lower rates or even reduce the spaces, or some of them moved out completely, as we've seen in the report. So we definitely have to imagine the workspace. One of the things that will be a big deal in terms of the working space is the social distance or physical distance that will be required. The space will require to be very conducive in terms of enabling even pre-entry sanitization, proper ventilation, proper lighting. So the office space may not be as we were before, where you pack in very many people. So you might find that there will be a balance of this. Either most people will move and work from home, or businesses that actually have to have a physical contact will then increase in terms of size, and therefore you find more uptick in terms of office spaces for renting. And I think also the other thing is that most people now will begin to look at home as a place to work, and therefore homes will begin to become carefully chosen in order to have some spaces where people can actually have what they call a home office, which is conducive for working. So there'll be we are already seeing that reimagination, and now with COVID-19, this is going to increase. And of course, I think it has already happened. We've seen very many people who've converted some rooms or some spaces in their houses into offices. And I agree with you that this is just the beginning of it, and we're going to see a lot more in the future. And the office spaces that are currently in existence, or the stock that you already have, will really need to work on their pricing in order to be competitive and to ensure that there's as much uptake as possible going forward. Thank you.
Thank you very much, Florence. I'd just like to go back to Planner Juliet Rita to ask a question. When we reported on commercial spaces, the best performing markets were Westlands, Gigiri, and Karen. And the lowest were Nairobi CBD, Thika Road, and Mombasa Road. And if you note, these are the places with the biggest arteries or the roads that come into the city. So can you comment on this from a planning perspective?
Thank you. Again, it has to do, really do with aspects of planning and also how we integrate land and transportation. In most cases, when you talk of roads such as Thika Road, Mombasa Road, then people will immediately connect it with more access. But in real sense, when you're looking at how commercial space operates, we don't look at access in terms of how fast cars are moving, but rather access in terms of how easy it is for someone to access the commercial facility, conduct their businesses, and exit as soon as they can. So as we experience, you have to appreciate, especially on Thika Road, the case that happened when you're looking at areas like Ngara, even Pangani, all the commercial businesses which were lining up the road, actually it's sort of, they died off, and businesses also relocated, same to do with office spaces. And this has to do with, first of all, it's a situation where you can't easily access the buildings, and also a situation where we still have a lot of congestion, especially if you're going to areas like the CBD. And that would put off someone who wants to access their commercial or office spaces as easily and has to have access to other people. You're talking of also access to parking. So all these aspects really come in and explain why when we do major road infrastructure, we are not actually opening up these areas for businesses, but actually we are losing out on businesses because we have not integrated the softer issues of how people access facilities along the roads. So this would be one of the explanations why we are seeing a decline in terms of uptake of commercial and office spaces in these areas. Thank you.
Thank you very much, Planner Juliet. This brings me, I think, to the question that I have for landscape architect Ofafa. We have reported on construction of the Nairobi Expressway, which is very much like Thika Road. It's very much like Mombasa Road. So the question is, its design was set to begin last month. Does the design, in your opinion, take into account the landscaping principles and the other planning principles that Juliet has talked about that would make it a positive addition to the city? Karibu, Ofafa.
Thank you very much, Marilyn, for that question. First of all, I'd like to commend the government on undertaking this project. Clearly, its intention is to ease the traffic jam, which is going to be achieved in a big way. When we talk about landscape architecture on the project and the environment of the city, I would like to say no, it doesn't take into account any principle. However, I'd like to mention this when we're talking about the environment, that the intention is to move vehicles very quickly, thereby reducing the choke caused by carbon dioxide produced by cars. That way, it really takes care of it. However, had they consulted the profession, it would have been made better. Like what is clear, if you look at the mobilization that is happening on the road, there is clearance, serious clearance of vegetation to pave way for it. Had they consulted the profession, they would have been shown better ways of doing it. Most of the vegetation that was occurring, where now the suspended expressway is going to be, was transferable, and all that was cleared. Had they consulted, they would have been shown a better way, hence taking care of the environment in a better way. Now that they have cleared, it is still not too late for them to consult. One, we can give numerous proposals on how they can compensate on what they've already done. Like, for example, adopting other open spaces and replacing or putting vegetation that can take care of what was destroyed with your paving way for the construction of that road. The other thing, of course, comes with aesthetics. As a profession, we find the proposal that was shown to us extremely hard. And in our eyes, it's boring, just like what Juliet Rita said. Had they consulted us at no additional costs, probably just on what the project was going to take in, we would have suggested better ways of how to improve on the aesthetics of that road. The other thing is we will have made it more people user-friendly than motor vehicle friendly. That's what I'd like to say. Thank you, Marilyn.
Thank you very much, Ofafa. So it is a two-edged sword. That is what we are getting, that yes, it is going to ease congestion, but there are a few things that could have been done better. I'd like to now speak to Engineer Mike Ndiritu, who is the Secretary of the Engineers Chapter, and just staying with the question of infrastructure. So the Nairobi County, Nairobi continues to undergo a lot of infrastructural development, roads, railways, warehousing, etc. Yeah, do you see this as a spur for development?
Thank you. I'm starting in for.
Karibu, Engineer Ndiritu.
Thank you. I'm standing in for the chairman. But to travel to this business. And I've prepared a little. And the answer to that is most definitely, and we have to look at the phenomenal growth that happened after the construction of Thika Road. Also the phenomenal growth that happened as a result of the construction of to expand. So most definitely, yes, the answer is definitely spurs economic development. The arteries through which the economy passes through. It has to be remembered that at all produce workers to jobs, students to schools, sick to hospitals, and similar trips. And of course, we can expect that there's going to be a phenomenal of the Nairobi Western Link Road. And the intention of the expressway is for somebody to get on it and move from one place to the other as fast as possible. Who, especially in the peak periods in Mombasa Road, till the travel period. Waiver expressway is designed to reduce the amount of time that somebody takes when they are using the road from long haul. It is designed to in shortest period. Most definitely, yes. The construction of roads and also railways. We are also talking about in terms of railways. I don't have any details about that. It's shortly to. So the answer is yes. And thanks. Thank you, Marilyn.
Thank you very much, Engineer Ndiritu. So the answer is yes. All this infrastructure development is going to spur development. I think just staying with infrastructure and looking at the angle of environment, I'd like to now ask Architect Gideon Olawo, who is the chairperson of the Environmental Design Consultants Chapter. So the government expenditure on infrastructure is on the rise. In our report, we've recorded that 169 billion is earmarked for spend on roads in 2019-2020. In your opinion, Architect, are these infrastructure projects taking into account environmental concerns?
Thank you so much, Madam Secretary. Yes, first of all, I want to just echo some of the points that have been mentioned earlier. Whenever we have development projects, roads included, they have impact. And this is not going to be any different. They have impacts in terms of socio-economic impact. And in this case, we have environmental impact as well. So looking at it from our side, yes, this is going to have a serious impact on our environment. And especially so, we're looking at people who are going to be in there. We are looking at people who might be displaced, people who will be compensated. We'll also have areas that have been reserved for, for heritage that could be affected. And those ones will have, the road construction will have an impact. But more so, we're looking at the positive aspect where the impact will be on economic growth. Will mean that we'll have employment, we'll have so many activities going on, and so there'll be a trickle down to almost every sector, from professionals to suppliers to the people who will be working around. And so, in my view, I think that the government as a major stakeholder has taken this into consideration, and to ensure that as a main stakeholder, the people of Kenya are consulted. One, that plays a big role. The second one is that even those who are funding these projects, they insist, like World Bank have a way of ensuring that the funds they give are spent on projects that have less adverse effect on people, on an environment. IFC, for instance, also has those rules and regulations that guide their funding of this project. So yes, the government has taken into consideration the impact of this infrastructure on the environment, and I believe that there could be loose areas. I think one of them has just been mentioned, the expressway, that has come to a stop because of less consultation. So what I would say is that clearly, yes, the government as a stakeholder has that responsibility of ensuring that the impact is less. And as such, where it has failed to do so, certainly those of us who are aware will have it stopped. And I believe that the majority of the projects have taken the life of environmental impact assessment and ASIA that is required, so that as the projects are being implemented, we are basically we are not going to start seeing so many of the projects being stopped, because it's a very big cost when projects are stopped. And so I believe that the government has taken that into consideration. The other thing that we also look at is that when these projects are being designed, this consultation, and at the point of design, we expect that the environmental concerns are picked and included. Thank you.
Thank you very much, Architect Gideon Olawo. So we can rest easy that the government has consulted, and what we are saying as professionals in the built environment, as members of AK, is that we are willing and available for consultation should the government want to get a view on these projects before they are implemented. I would like to now touch on the energy sector, which we reported on, and I will go back to Engineer Mike Ndirito. And I'd just like to ask you a question on the Kipeto wind power project. It's expected to have a capacity of 100 megawatts. How do you see this affecting the lives of Kenyans in terms of power supply? Engineer, over to you.
Yes, of course, we could use much more power throughout the country. And the government has been trying to distribute power to all corners of the country. Kipeto, to the best of my knowledge, is it was actually initiated by privateers, local and international. And it's actually a consortium of investors and financiers. And I understand they have signed a 20-year power agreement, where they provide power to power and they get compensation in return. And that is only positive. Around Gong area and Gai and other environments around there. The country only stands today. That's all I can say. They're very positive. And we hope that we see this happening more and more.
Okay. Thank you very much, Engineer. So Engineer doesn't want to commit as to whether our power bills will go down, but there's an additional 100 megawatt supply into our system, and that can only be good, according to Engineer Nderito. Let me go back to QS Mbaya and ask here a question about money. In our report, we've noted that several banks have committed 335 billion in mortgages to fund the affordable housing program. What do you see as the impact of this to the construction sector, that we now have 335 billion available within the sector? QS Mbaya, karibu.
Okay, that is a positive development, and its uptake would would mean that more people get, as we had earlier mentioned, decent housing. So decent housing for people, because the housing should not be only affordable but also decent, as has been mentioned earlier. It also means that when we go by the process of making sure that we are buying local and also building with local materials and also using local consultants, and that means also transfer of technology to locally. So working with also foreign construction firms, but also local firms, there will be transfer so that build-up of knowledge by the local firms will increase. It will help local construction firms, subcontractors, and even suppliers of materials. The other positive thing is that with improved life, people getting affordable housing, it also helps people's health. People are able to live in houses where their health is improved, better lighting, better ventilation. So it is also good. People are able to also work from an environment that is also good for them. So everything that is a positive. And also because the money will be able to circulate within the economy, that is great.
Thank you very much, QS Mbaya. So this is not just 335 billion. What we're saying in the report is that this is better housing. This is better lives all around for everybody. I'm going to now go to architect Douglas Ochong. He's the chairperson of the Construction Project Managers Chapter. And I'm going to touch on the Big Four agenda. So through the government, the agenda has spurred industrial growth. And additionally, the COVID-19 pandemic has also acted as an incentive for increased local production of construction inputs. We have seen hospital beds being produced locally. We have seen ventilators being produced locally. Can you comment on the effect of this increased local production as a construction project manager? Karibu.
Thank you very much, architect. One, it's been said, I think the president said it, I think our chief guest talked about buying local, building local. Yeah, so it's straightforward in terms of cheaper and available input. On the other hand, you have the situation of COVID that has now limited our ability to be able to import. And inevitably in that adversity, then we do have the opportunity to be able to depend on local production and local products. But I'd like to go back to, with regard to this item, I think on the inaugural launch of this status of the built environment, it did come out that 85% of the value of work in the construction industry, both consultancy and contractors, was still being done by foreigners, and that we were just struggling over 15%. Now, what that tells us is that we actually do have demand in this setup, yeah? And we've had a situation where the local people, either because of the way projects are structured or because of capacities, yeah, were unable to compete. So then this now then gives us, as local practitioners, project management, architecture, across the board, business people, yeah, to up our game in terms of building our capacities so that come end of COVID, we should be able to outcompete all these people. The other thing that I think is coming out when we try to develop our local capacities, that for a long time, all the sectors of, be it the profession, be it the construction industry, has been operating in silos. And that is where we're losing out a lot on the international firms. And I'm glad to say that I'm seeing increased collaboration, yeah, between the local players. Talk about contractors collaborating with consultants, collaborating with financial institutions, so that we are able to deliver projects as a package. So for me, from a project management point of view, COVID and the government interventions actually give us opportunity, and it is up to us, yeah, to be able to take advantage and leverage of these situations so that we can build our capacities, so that post all this, we stop complaining about not getting opportunity. We focus more on what we can do, and then we'll be able to grow our professions. Thank you, Architect.
Thank you very much, Architect Ochong. So we need to be able to leverage our strengths to come together as professionals so that we can get these projects and work on them locally. I'm going to take us back to Architect Florence Nyole. And this is on the affordable housing that we've reported on. So according to the report, we've listed there that there are several incentives that are in place for buyers of the Park Road affordable housing units. Among them is a partial credit guarantee. So you're assured that you'll get a mortgage of some sort if you take up that housing. Can you make a comment on these incentives and how effective you think they are in the Kenyan market? Karibu, Florence.
Thank you very much, Mumbua, for that question. I think affordable housing is something that is in the mouths and ears and faces of everybody. Everyone is talking about it. So I'll just first start by saying, yes, the credit, partial credit guarantees that the government is offering is a welcome move. As we all know, the intent of affordable housing was to be able to unlock financial opportunities for people to be able to afford the homes that the government is constructing. So what happens is that the partial credit guarantee is then able to enable someone who is probably working in the informal sector afford something that would require a lot of formal requirements, especially when it comes to mortgaging. The bank would require a lot more paperwork, and therefore, if you've been able to raise at least 12.5% of the value of the units that you are buying, that enables you to get some credit guarantee, and this has been done because the government is able to cushion commercial banks from this to the Kenya Mortgage Refinancing Corporation. So it's a welcome move, and I believe it enables a larger sector of the population to access affordable housing. The other incentives that we've seen there is the waiver of the stamp duty for first-time homeowners, and this is very, very important. And as long as they are within the scheme, they are able to get some money in their keep some money in their pockets and maybe pay to enable them to pay towards the mortgage itself, as opposed to paying a stamp duty, which is a welcome incentive. Remember, stamp duty is about 0.1% of the value of the financing that you're getting, which could be it could be some good money to be able to put back in your pocket. We also see indication of some tax relief of about 9,000 shillings, which the government is extending towards those who are in the scheme. That is still a welcome move. Perhaps 9,000 shillings is just a figure. I wish it could be prorated depending on the value of the unit that you're taking up, so that it's either taken off as a percentage of the value of the unit. Because if you're say for instance, paying back a mortgage for 3-bedroom, you're probably paying more money than someone who's paying a mortgage for a 1-bedroom or a studio apartment. And therefore, if it's prorated, then you get value for the mortgage that you're paying back. So it's a welcome move, but if it could be prorated, depending on the value of the house, that would be quite something as well. We've also seen the tenant purchase scheme. I think this is one of the things that the government really needs to explore further. I think it's one of the things that can really enable Kenyans to afford homes. One is because we already pay rent anyway. So if you're able to get a scheme where you're paying rent, the same amount of money that you're using to pay rent is the same amount of money that you're paying in order to own a home. It makes it very affordable, because when you're not going out of your way to then find financing elsewhere, you're basically using your ongoing payments for rent and just converting that into a financial gain. In this case, then you're able to purchase and get an asset for tenants. So I think tenant purchase scheme, which is very successful in other countries, Malaysia, Singapore, and other countries, it's something that really needs to take up in this nation. I believe the civil servants housing schemes have been able to do that to some extent. I wish it could be enhanced a little bit for affordable housing program, and even bring on board developers who are willing to work with the government in order to enhance this particular arrangement going forward. And then we've also seen that there's the ease of requirements for mortgages for people who are under the affordable housing scheme. Again, it goes back to the #1 credit guarantee, where you find that even when you're in the informal sector, in terms of how you earn your income, where you're not a salaried employee as such, so you're able to have an ease in terms of requirements to get a mortgage, then it really increases the number of people who are able to afford homes, so that it's not locked up only to those people who earn, a regular salary, which of course we all know banks would like to see that you earn a regular salary every month in order for them to be able to do their deductions monthly. But with this new scheme and with what the government is doing, I think it's a good beginning. There's a lot more that can be done in order to increase the affordability of these homes, and also to segment some of the homes that they're creating, so that you do have low not very expensive units, but you also have units that also cater for the middle income, who also have a bit of money and they are willing to pay slightly more in order to be able to get some affordable housing. So there's a lot more to be said, but I believe that this is the beginning of a good thing. And I think if we continue working with the government in this way, we should be able to enhance this product that they're calling the affordable housing. Thank you.
Thank you very much, Florence. So the government is in the right direction. I'd like to just go back to Architect Douglas Ochong. We've noted that there's a marked decrease in engagement of built environment professionals in this pandemic period, and there's a reported increase in the costs of project execution. Can you make a comment on some of the challenges that are being experienced and possible solutions in this pandemic period?
Thank you very much, Architect. In project management, uncertainty and increased costs, are risks that will stop any project, because it undermines the project achieving its goals. So inevitably, under these situations of uncertainties due to COVID and increased costs, the sponsor of any project would either put a project on hold or cancel the project altogether. So therein lies the challenge. The challenges then would be straightforward. Your cost of the project has increased. That's one major challenge that I've foreseen. The other one is conflicts on ongoing contracts, because you have a situation where you can't blame anybody. On the other hand, somebody will say the contract says this, the contract says that. So we see rise or possibility of rise of a lot of conflict, And then, of course, because of the projects put on hold and the projects which are cancelled, there's no cash flow for the consultant or whoever the players were in the project. How do you deal with it? Most projects would just be stopped, yeah? But I think it is important that you evaluate the project parameters to enable proper decisions. Yes, we've been told COVID is here and may be here with us for a long time, yeah? But the truth is that it's a temporary situation, yeah? It may last 6 months, it may last a year, yeah? It's a temporary situation. So it is important that you're able to analyze COVID as it is right now and reevaluate your parameters in terms of how you're reacting to it. I do have a client who, as soon as the lockdown was announced, within the first month, they stopped the project. But after evaluating 2 months into the lockdown, they realized that this is perhaps the best time to move very fast, finish this project, so that when everybody comes back, they are ready. So it's not necessarily beneficial all the time to stop everything. Enough times you may find you're losing even more. The other question is conflicts. This is a force majeure situation and you can't blame anybody for it. In contracts where everybody insists on having their way, all of us end up being losers. What we found out that works is sit together, talk, and agree with each other as a contractor, as a client, as a consultant, agree on your cash flows. Then you'll get into a situation where we all get a bit. Otherwise, you're in a situation where we all become losers. There's no winner, there's no loser in this situation. So we must approach it at that level where now we are collaborating so that we achieve the best product for us. With regard to reduced cash flow to consultancies, there's no real research on this, but talking to a lot of fellow consultants, architects, QSs, and the rest, you find that a lot of us operated on that traditional corporate level where I have an office, I have a receptionist. So you have a role as a receptionist, you have a role as a technician working for you, yeah? And these roles are paid for monthly, yeah? With the current scenario, that has become very expensive for a lot of consultancy, yes? And we see more of consultancies going towards task, where I have this project and I agree with somebody, do for me up to this stage, then I pay you so much money, yeah? So then you're just paying for the task that is done, not a role or the name that somebody has. That, I think, is also helping us now be more competitive in terms of being efficient with the cost of production of our products. And perhaps the big one, we're meeting like this right now, is leveraging on software, yeah? Being able to work from home. So again, your requirement for more office space and travel is getting reduced. So for me, it gives us a lot of opportunity to reevaluate and restructure our business. So we should not necessarily look at the challenges of COVID as a bad thing, but it gives us opportunity to reevaluate how we do our business. And I think if we take advantage of this, we're likely to come out stronger than we were before. Thank you, Architect.
Thank you very much, Architect Ochong. I'd like to now invite Planner Mairura Omwenga, who is the chairman of TISPAC, to just make a brief comment before he has to leave us. Welcome, Planner Mairura Omwenga.
Thank you, Facilitator Mboy, for this opportunity. Now, a quick one. First and foremost, let me appreciate the efforts by the Architectural Association to be able to launch this important report, but also to be able to bring us together as professionals in the built environment. I also want to thank the Shelter Freak who made a very good presentation before earlier on. Now, very quick one. Number one, I think it's true that the COVID really is an issue that we must acknowledge and see how best to live with it as we try to work out a solution. I think historically, these kind of problems have shaped the way in which we plan and develop our cities and towns. Indeed, there's a close relationship between town planning and public health. And many of the changes in terms of planning and development, and indeed, therefore, in terms of the built environment for the actors, engineers, actually arose out of these kind of pandemics. So I think much as it has got its shortcomings, but it has also got a silver lining. So number one, I think I want to say that, for example, in the construction industry, and speaking as an engineer, for example, along our roads, we should now be seeing more, or not just motorways, but also provision for the non-motorized transport, where people are able to cycle, to walk comfortably, to make our cities more livable than they have been in the past. So I wish that while this is still hot, to be able to persuade government and the decision makers to at least make sure that our transportation system becomes more environmentally friendly and green in that respect, so as to improve the health. Of course, we already see the reduced pollution in our cities out of the reduced transport movement in that regard. And I think that's the direction we should be moving towards. We should be seeing now getting onto more electrical modes of transport, okay, because that the technology exists, and therefore we need to see policies geared towards that direction, rather than having again motor fuel, okay, again polluting our cities. Secondly, in terms of the design of buildings, I think this is a situation where we must now see buildings receiving more natural lighting. So therefore, even in terms of orientation of buildings, we should be looking towards having buildings maybe facing east-west direction, okay, and having as much sunlight as possible inside, because there's a direct relationship between this kind of virus and the natural lighting and also ventilation. So that becomes a very important item. Then lastly, two major items that are currently under discussion, which are worth our observation. Number one, I think there is a court ruling this week that has stopped the procurement regulations that were going to make it difficult for people to petition some of these irregular procurement. And I think it's something that we need to pick up as professionals of the built environment. And this is where the regulations that were passed by Parliament and gazetted by the CS were going to make it impossible to ever petition, because you needed to also put in place billions of money for you to petition any issues in the procurement sector. And I think as a team in the built environment, that must be a good thing that we need to make a follow-up. There's a court ruling to that effect, because it was going to make it impossible to ever petition any of these major projects. And of course, then that was also going to worsen the corruption in this country. Then the second one has got to do with also in the same line, there is a bill currently in Parliament, which we should also take interest in, where then it makes it now possible that really for huge projects, they should be able to be cut down in smaller units, which then should be given out to separate entities in that regard. And I think that is very good news for us as local professionals, because then it opens up more opportunities for us to participate in these items. And indeed, then it supports Buy Kenya, Build Corner. Thank you very much. And for that, I must leave the meeting. Thank you and God bless.
Thank you very much, Planner Mairuro Mwenga. He's the chairman of TISPAC, which is Town and County Planners. Just to mention that AAK has been at the forefront of bringing together the built environment professionals. So we have a coalition of built environment professionals where we have all come together and we are speaking in one voice. I'd like to just wrap up this panel session with two last questions. A very quick question to Architect Gideon Olawo, and I'd like you to be brief and tell us what you see as the environmental impact of the Kipeto Wind Power Project. Architect Olawo?
Yes, Thank you, architect. And this is one of the projects that is very close to my heart. One, it's because it's propagating our quest for green energy. And we want to thank the government for keeping track on building sources of energy, green energy, especially in the areas that were hitherto not touched. I want to say that this is actually the second one. The first one was done in Turkana, producing 300 megawatts. And so with Kipeto, we are going to have, or we are already having, 400 megawatts of green renewable energy. And as a project, I want to say that there are two aspects. The impact comes in two folds. One is that we have the negative impact, and also we have the positive impact. For Kipeto, I want to say that the positive aspect, the positive impact outweighs the negative aspects, and the negative aspects have been addressed. Actually, looking at the report of this project, it's very admirable, and I would want to say that the positive aspects of this project providing us with clean energy, unlimited energy from naturally occurring phenomena of wind. It has also gotten economic upgrade, so to speak, in the area. We have people who are now employed there. We have people who are employed there as consultants from various sectors. We also have we have also had impact on the architecture. Interestingly, with the coming of this wind energy project, we've noted that the impact on the local architecture is beginning to transform, where we are seeing permanent buildings are being done. We are having new materials being used there, so that the local materials that were there are slowly being incorporated into the modern architecture. And I think that is very positive. We are also looking at the population increase. Kipeto was hitherto sparsely populated, but now with the project, it has attracted a lot of people around, or it is attracting people around. And indeed, the positive aspects of this project are many, and not to mention the other one of it's not polluting the air around as energy. It's as a form of energy. It's basically providing no pollution. It's green energy, as I said, and we are looking at having transformed the area in terms of road networks that have been built around. We are also seeing that with this project, we have a relationship that has been drawn. Looking at the environmental impact assessment that was done, it's very clear that the proponents of the project took cognizance of the one basic requirement, that investing in the social capital, that is getting to sell the project to the people, to take them through what the advantages are to them and to the government and the entire nation. And so that was really quite important, that the positive environmental impact aspect of it was addressed very well. But of course, a project like this does not come without negative aspects. So we have had negative impacts on the ecology, the fauna there. But from the look of things, those have been mitigated. 2, 3 things that are still there. One being is the impact of flying birds, and these basically we are saying when you look at the migration of birds around there, they've been affected by the movement of the rotors. So some of them could have been killed in the process. We believe that is to be addressed and see how best to get about it. The other disadvantage that comes with it is, these rotors, when they move, they also interact with the wind and so produce some noise. So to address that aspect, I believe that the proponents actually gave a buffer, so that there's a buffer of about 750 meters around that is basically not to be occupied. And this is just to ensure that the noise pollution, pollution that is expected, it does not affect the residents. The other thing that we see around there is that, or something that we can consider as a negative impact, is basically, during the dry season, with motor vehicles coming around, there could be generation of dust. But those ones, there are mitigation measures that have been taken into consideration to ensure that the project, as it is, brings in more positive impact than the negative. And I want to just commend that the government has actually, with the proponents, have really taken cognizance of all those negative impacts and are addressing them and involved the people around. I think that is one of the things that we must commend this team. And we say that even other projects that are being done, they should also involve people at all levels, however costly it is. In one of the cases, it's actually rated as one of the best practice. It has engaged, it has involved one of the best practice in community involvement and community participation. And very many people actually who go there, who have been there, have given their comments as such. And so even for us as environmental design consultants, this to me makes a big sense to follow, and even to recommend that we should be having projects of this nature being done in the way that this has been done. Thank you.
Thank you very much, Architect Olawo. Just to note that we are recording this session and we are also live on Facebook. We shall upload it onto our YouTube channel, so you can subscribe to our YouTube channel, the Architectural Association of Kenya. My final question today, before I take questions from the media, will go to Landscape Architect Ofafa. And this is in regard to all the infrastructure projects we have cited in the report. For example, there's a second Nyali Bridge coming up, there's the Nairobi Mombasa Highway, and so on. Can you briefly comment on the involvement of landscape architecture professionals, and particularly local ones, in these projects? Thank you.
Thank you very much, Architect Mumbua, for that question. I'd like to, first of all, commend the government and other proponents for trying to promote this profession locally, especially through the State Department of Public Works. I'm aware that the State Department has been consulted to offer landscape architectural services on some of the ongoing projects that the government is undertaking. However, I'd like to mention that what the government is doing is good, but not enough. What the government is doing is that the landscape architects who are employed by the government are actually consulted after the roads have been built or they're undergoing construction. I like to say it is best if the landscape architects are involved right from the design, right at the design table, right at the conceptual level. That actually is the best. And what I like to mention, and also like to echo what Architect Gideon Olao said, as well as Architect Ochong, that when you consult locally, the projects become actually cheaper. They are custom made based on the local conditions. Thank you.
Thank you very much, Landscape Architect Ofafa. I'd like to acknowledge the presence of Gikonyo Gitonga, who is the Director of KPDA, and he has to leave this meeting, but before he leaves, I'd like to ask him a question, and I will just tie it to the questions that we have received from the press. So there's a question here from Martin Mwita that says that with an 87.5% reduced inquiry, what is the projection for half two of 2020, while COVID is still here with us. Perhaps you can comment on that, Mr. Gitonga. Karibu sana.
Thank you, Marilyn. Thank you for giving me the opportunity to answer questions. I'd like to first of all start by congratulating AAK for a wonderful report, and we would like to urge you to keep it up. I'm sure we will be able to give you feedback on the report. Basically, I think what's going to happen in the next quarter is that there is still going to be the industry taking a wait and see attitude. I think from March, everyone was in a panic. They didn't know how to deal with COVID. But now I think everyone has now reached a situation that they have realized we have to live with it. It's a new way of life. If you ask when will post-COVID come, no one can be able to tell you. They say maybe it will come after a vaccine is discovered. And that could take another 18 months or maybe even up to end of 2021. So therefore, what's happening is that people have been waiting to see what's happened. Various sectors in the industry have had different reactions to COVID, but certainly we are going to see a drop there'll be some job losses between now and the end of the year because there'll be projects that will have been stalled, there'll be projects that will be put on hold. But I believe that after the end of the year, from around January, February, we will then start seeing people saying, let's go back to construction so that we are ready with our developments, so that they're ready by around 2022. So there is going to be, I believe there will be a turn. Speaking to some developers who had been stuck with some projects, they had not sold some of their properties. They've said that during the COVID period, they've actually seen an upsurge in some of the sales of residential developments, especially in the field of between 3 million to about 7 million. So there will be job losses, especially because of a slowdown in construction of schools, a slowdown in construction of hotels and in the hospitality industry. But also we are seeing a converse that there is also an increase in construction of healthcare facilities, and there is a lot of infrastructure projects that have been signed up. When you look at the Kenol, Sagana, dual carriageway, there is possibility that the Nairobi, Nakuru, Mau Summit dual carriageway will start. So those construction projects will also spur some jobs. The developments, a lot of the government is also doing through Kazi Matani, the markets that have been built. NMS is, Nairobi Metropolitan Service is looking at doing a lot of rebuilding of health facilities. So I see there will be an upsurge a bit, but not as, we're going to be still in for tough times until the end of this year. Thank you.
Thank you very much, Mr. Gitonga. Before I release you, I'd like to just field one more question to you. And this one is from James Wanzala. He notes that our report says residential sector earnings have remained stable due to people working from home. His question is, what about the rental yield falls due to the effects of COVID-19, like job losses, business losses? So how can you explain the sector remaining stable, the residential sector?
I think what happens is that there is still, although people are going through some job losses, what it has, in terms of stability, I would say that the lower income houses have remained stable. But when you look at the middle income and maybe high income, they could have gone down a bit. But when you look at it overall, it then looks like it has been stable. It has been it has flattened out at zero. So you will see that the lower income, there is more demand for it, but the upper income and the middle income, there's been a slight dip, but still people are, there's been a slight dip, but people maybe they have restructured how they live, and maybe they are, now you'll find that maybe children who had moved out are moving back into their parents' homes. So that's what is there is sort of an evening out of the both markets. Yeah, all the three markets, sorry. Yeah.
Okay. Thank you very much, Mr. Gitonga. So people are sort of moving from one market into another one. Thank you very much for your continued support of the AAK and partnership and working together with us, and for being present at this launch. Asante sana. So I'd like to now also recognize the presence of Robin Emerson. She's the president of Women in Real Estate. Robin, welcome very much. I'd like to just ask you one question. I think Mr. Gitonga might have alluded to the answer, but Martin Mita would like to know that as people are losing their jobs and they are moving, where are they moving from and to where are they moving? If you can just give us your view on this. Karibu, Robin. Okay, it doesn't seem like Robin is still here with us. So I can
answer that question.
Okay, go ahead.
Okay, what has happened is that a lot of people who, because of the risk of losing their job, and people are now starting to move out onto the outskirts of Nairobi, to the suburbs. So what you'll see is that suburbs like Athi River, suburbs like Ruiru, Juja, Kiambu are now starting to see an upsurge of demand for especially vacant land. So people who are maybe living in apartments, let's say in Kilimani, Kileleshwa, Lavington, have now decided if they had a plot, this is the time to start building. If they didn't have a plot, they're now going to buy it. And so what you will see, if you talk to the people like Tatu City, they have just seen a phenomenal upsurge in purchases of land of 1/8 of acre, quarter acres, and half acres, especially 1/8 and quarter acres. So people are saying, I now, instead of renting my home, let me own a home with a bit of a garden space, because I now have to work from home. I need some space, some green space for my children and things. So places that have got serviced land with good power, good internet connection, have started seeing an upsurge. Also, what has happened is that some certain developers who are selling houses between 3 to 7 million have indicated to me that they have seen an upsurge in cash purchases of apartments where that are outside. So people are trying to move out of crowded apartment blocks and into blocks that are not so crowded, and at least there is a bit of some green area. So you will see that the upsurge of demand in areas that goes up to, even as far as up to Thika. So that's what's happening. That's where they're moving to.
Okay, thank you very much, Mr. Gitonga. So now we know where people are moving to. Jacob, I'd like to just throw this question to you. It's from Martin Mwita. His question is, what is the Architectural Association of Kenya's stand on the Nairobi Expressway planning and project execution?
Thank you, Madam Onsek. I think that's something that we have been following very closely. As mentioned in our report, is that we've got our concerns about the manner in which the whole project was formulated. Ordinarily, such a massive project requires some level of public participation. It has an impact on many aspects of residents of Nairobi. And it's still the associations believes that we should have had more consultation, more reviews, so that when you put together this project, it's actually owned and accepted by the residents of Nairobi. We also know that the matter of prioritization of expressway is raising a lot of concern, because there are many other priority issues that can actually be considered by the government to ease the traffic flow in this city. We have to look at options that can have an impact. For instance, the mass transport in the city, allowing, for example, other options like non-motorized transit in the city. So we find that much as it's a very expensive project in this country, that money could be better used in producing some more impactful solutions for the city of Nairobi. Thank you.
Thank you very much, Jacob. I'd like to now invite back our guest, the CEO of Shelter Africa, Mr. Andrew Chimponda. I'd like to ask you a question, and after which you can make a closing remark. So this question is from Martin Mwita. In your opinion, Mr. Chimponda, are Kenyans getting value for the expressway, and is the cost justifiable? Welcome. Mr. Chimponda, are you still with us? Okay. I will take the same question and I will shift it to our chairperson of the Construction Project Managers Chapter, Architect Ochong. Please make a save. Are Kenyans getting value for the expressway, and is the cost justifiable?
Thank you very much. It's a tricky one to answer a question on something that has gotten some bashing, but I think I'll agree with Ofafa. Yeah, one, in terms of easing traffic, yeah, the expressway will help a great deal. We really do have a problem with traffic in Nairobi. Are we getting value for money? Yeah, the CEO alluded to that. Yeah, because how does a city operate? Yeah, the value of a city is a lot to do with how do you get people to work and how do you get people out of work. Yeah, so it involves more than just vehicles. Yeah, it involves all means of transport, including non-motorized transport, people walking to work. It involves trains. Yeah, so it's about taking people to work and back. And with regard to that, I'm not sure if it is the best option for the amount of money being spent. I mean, we spent quite some time talking about the mass rapid transport. Yeah, and for my own personal opinion, I think engaging on the aspect of mass rapid transport, yeah, it's critical to Nairobi right now. So from where I stand, in terms of the city, I'd go more for dealing with the MRT issues than just moving vehicles from point A to point B. Thank you.
Thank you very much, Architect Ochong. So there is some value, whether it is worth the amount invested in it is a question that still needs to be answered. Okay. I would like to now invite a final question from the press. Anybody with a pressing question can unmute themselves and ask that question. I have dealt with the ones that were in the chat. So if there is any pending question that you'd like to be answered, please feel free to unmute yourself and ask that question. Okay, there are details of registration with us for the press. You can send us your name, your email address, your telephone number to communication@aak.or.ke. If you have any further questions, then we will have them answered. So I'd like to now invite Nashon to make some closing remarks before we have our vote of thanks from our advocacy manager, James. So Nashon, karibu sana.
Thank you, moderator. My name is Nashon Okoa, the Chairman, Association of Construction Managers of Kenya. Well, mine is brief. First, to congratulate our colleagues, AK, for a wonderful presentation and report on the health and the status of our built environment. Well, it depicts what we are facing as an industry and as a country. I think my 2 cents addition would be this virus has taught us to look inwards a lot at ourselves as a continent, as a country, and we must make this conscious decision as a people to deliberately build our local capacity in the construction sector. I think for a long time we have spent an awful amount of time waiting for Calvary when I think we are Calvary ourselves. So it would be good, and I think we'll be working with our colleagues to push the government to ensure we have a lot of our local industry, the SME contractors, the late payments of contractors from counties and consultants from counties and parastatals. These are things we need to put under the bridge. Otherwise, thank you very much, everyone, members of the Fourth Estate and my professional colleagues. Thank you.
Thank you very much, Nashon, and thank you for your continued partnership with AK. I see that Mr. Chimponda is with us. There is a question here for you from the press, and I'd like to just field it before we close. So in an earlier interview with BBC, you are quoted as saying the shortage of material from China had resulted in the company downsizing its ongoing low-cost housing projects. What is the current status? Mr. Chimponda, please unmute.
Is that better? Okay, thank you very much, Mbea, for that question from the press. Yes, I think that is correct to say that on the projects where we were importing materials from China, we had to, obviously those projects have been delayed. Let me just give an example. For instance, in Kigali in Rwanda, we've got a 3,000 unit project, which is a public-private partnership with the city of Kigali and the Development Bank of Rwanda. It's called Rugarama Park Estate. So, of course, some of the materials that we were importing, we couldn't import because of the situation with COVID. But what I would like to say is that what we are now doing is to encourage countries to buy locally, like what is Kenya is doing, which is going to be a trendsetter, because when we have such kind of let's call it force majeure situations, we're able to better manage them. It's not only building materials. In some cases where developers use a lot of people outside of the country, like for instance, we've got a factory which does aerated autoclave concrete blocks in Rwanda. Because the key staff was stuck in America and the UK, they couldn't continue building. So they couldn't continue producing. So I think one of the things we're looking forward going forward is when we assess developers, assess kind of partnerships, we want to look at making sure that from a key man risk, all the professionals that are deployed are actually locals, or there's a plan to develop locals, because we have to support Africa, because Africa lives matter. Thank you.
Thank you very much, Mr. Chimponda, and thank you very much for making time to be with us today. I thank you all for your presence and your participation. I will end this part of the session by inviting James Odongo, who is our Research and Advocacy Manager, to give a vote of thanks, and thereafter we will close. Thank you, everyone.
Thank you, Mumbuya. Thank you.
Thank you, Madam Honorary Secretary. Now, to the rest of the participants, I'd first really like to thank our sponsors and the Managing Director, Mr. Chimponda from Shelter Afrique. We appreciate your presence. We also want to thank our President for the launch of the SBE. We'd also wish to thank members of the Fourth Estate from the various media stations who've been with us throughout the session. We also want to thank representatives from all the other associations, including WIRE, ACMK, IQSK, KPDA, KEPSA, and TISPAC. Our thanks also goes to the respective AAK officials who've been with us during the panel discussions. Our appreciations also goes to the AAK CEO, the AAK Secretariat, and the PR agency that has been managing the whole event. With all this, we appreciate your input. We thank you very much. For members of the Fourth Estate, as you've shared your details, we'll be sharing the recordings and details of the proceedings for your reference. Otherwise, thank you very much and have a lovely day. Thank you.